Hi. What's up, Kim the Best? I'm about to start right now. I'm gonna get this thing popping. Going live on Facebook. So hi, welcome. Hi guys, welcome to the live. My name is Duke Alexander Moore. I am a QuickBooks Pro Advisor, and I'm also an enrolled agent. And I help entrepreneurs save on taxes. So what's going on right now is Monday through Thursday, I go live starting at 8 p.m. Central Time. And I dedicate this hour of my day to help you guys save on taxes. I typically, go over something and then I answer questions at the end. Today, what I'm going to teach you guys is the difference between a sole proprietorship, an LLC, an S-Corp, and maybe a C-Corp. So I promise you, by the end of this live, you will understand how a sole proprietorship is taxed. I promise you at the end of this live, you will understand how an LLC is taxed. I promise you towards the end of this live that you will also know how an S-Corp is taxed. And if I don't do a good job, you can just unfollow me, okay? It's that simple, but I promise you guys, stick around. It's usually about 10, 15, 20 minutes. After I cover how each of these are taxed, then I will follow up on questions, okay? So let's get right into it. So like I said, right now I want to show you how a sole proprietorship is taxed. So let's say if you do DoorDash, or you're an accountant, right? Or you do Instacart, you got a side hustle, you got a chicken sandwich business, whatever. I promise you, after this, you're going to understand how a sole proprietorship is taxed, okay? So first, let's draw a circle. So this is a sole proprietorship circle, right? Right? Probably drew that circle too big. So first we'll talk about sole proprietorship. Okay? Sole proprietorship, right? Guys, if you're just joining, I'm going to explain to you how a sole proprietorship is taxed. I promise you're going to understand. I'll make it very simple to understand. Okay? So this is sole proprietorship. This arrow here, this represents, so in your sole proprietorship, let's say you did $100,000 in sales, okay? So I'm gonna make up a business, and guys, if you use your join slide, the business I typically use is a chicken sandwich business, okay? So we got a chicken sandwich business, and we sold a bunch of chicken sandwiches, and we made $100,000, right? Okay, so throughout the year, people gave us $100,000. And I have to admit, I did learn this from Mark Cooler. Okay, so you guys should look him up. Great guy. I learned this from Mark Cooler. Okay. All right. So then let's talk about my expenses. Does ever just kind of send me an emoji or wave or say I get it if you understand that hey, we made $100,000. Just kind of give me like a thumbs up emoji if it makes sense so far. If it makes sense so far, just give me a thumbs up emoji. Hey, I get it. We made $100,000 in sales. Okay. All right. So then, let's say we had $25,000 in expenses. $25,000 in expenses. Okay. $25,000 in expenses. Got it. Yeah. Thanks for that emoji. Okay. So let's say we had $25,000 in expenses. Okay. Now, that means hey, we bought bread, we had to buy chicken, we had to buy chicken grease, we had to buy a fryer, we had to buy a refrigerator. If that makes sense so far, send me some type of emoji, a letter, a period. Everything I explained so far, if it makes sense, just say, yeah, it makes sense. Or give me some type of thumbs up that so far you understand that we had $100,000 in sales and $25,000 in expenses. Thanks for the follow, Louise. If that makes sense so far, send me some type of emoji. Okay, thank you. So it makes sense so far. Okay, awesome. So next we figure out our net income, okay? So this is known as sales. Sales is also known as revenue. So someone asks what your revenue is. Thanks for the emoji. That's what that is, okay? And guys, if you're just joining, I'm making a promise to you that you're going to understand how a sole proprietorship is going to be taxed in an LLC by the end of this life, okay? So we understand that we had $100,000 sales, $25,000 expenses. Next is to figure out our net income. To figure out your net income, you take your sales, right? Sales minus expenses. Sales minus expenses equals net income. Sales minus expenses equals net income. Okay? Sales minus expenses equal net income. If you understand that, just kind of just show me some type of emoji, put me something in the chat. If you understand that to get to your net income, it's sales minus expenses equals net income. So now we're going to figure out the net income on this, okay? So I have my calculator. Gosh, thank you for the emoji, right? So we have 100,000, 1, 2, 3, 100,000, okay? This is for Facebook. We have 100,000 minus 25. 1, 2, 3, okay? So on our calculator, down. So that's $75,000. All right. So our net income in this business is $75,000. Now I'm gonna erase this formula because I did see some emojis in here that hey, we understand that net income is sales minus expenses. All right. So our net income is $75,000. Right? 100 minus 25, 75,000. That is our net income, guys. That's our net income. Okay. So let's put this down here. Net income, $75,000. Okay? Net income, $75,000. Now, when you're self-employed, okay, you're going to have to pay self-employment tax. When you're self-employed, you're going to have to pay self-employment tax. That self-employment tax is 15.3% of your net income, okay? That self-employment tax is 15.3% of your net income. If all of this makes sense so far, give me some type of emoji, some type of heads up, like, yeah, I got it. Because I promise you guys, by the end of this live, you're going to understand how a sole proprietorship is taxed. Okay? So give me some type of thumbs up if it makes sense so far. Got it. So and guys, if you're just joining, we have a chicken sandwich business with $100,000 in sales, $25,000 in expenses, $75,000 net income. Net income. Okay? So, we're gonna pay 15.3% on our net income, okay? So then we pay self-employment tax at 15.3%. Okay? So you're gonna first pay self-employment tax. So you take your net income. You're gonna multiply it by 15.3%. Okay. If there's any actual tax accountants or professionals watching this, there's a more complex formula, but just to get the message across, I'm gonna tell you it's 15.3% for simplicity purposes. Okay. So first we figure out our self-employment tax. Okay. So we have our net income, which is $75,000, right? $75,000. We're gonna multiply that by 15.3%. Okay? That's $11,475. Okay? So, one, SE tax, okay, is $11,475. Okay? Guys, if this makes sense so far, give me some type of thumbs up or emoji if you're following it. And while you guys are typing all those, emojis, I'm going to explain this again for everyone who's joining. We're talking about how a sole proprietorship is taxed. I have made a promise to everybody in this live, by the end of this live, that you're going to understand how a sole proprietorship is taxed. Okay? So, let's say we have a chicken sandwich business and we sold a bunch of chicken sandwiches and we made $100,000. That means we have $100,000 in sales. $100,000 in sales. Okay? Then we take our expenses, right? So this is us buying the chickens, the flour, the oil, whatever it takes. You know, whatever it takes. Our expenses. Then we figure out our net income. Thank you for the gifts, AJ. Thank you so much for those gifts. All right, then we figure out our net income. And we figure out our net income by taking our sales minus expenses, net income. Once we have determined the net income, we're going to pay. Thank you so much for the gifts. They sent me 52 gifts so far. Once we figured out the net income, we have to figure out, thanks for the fire emoji. Once we figure out the net income, we're going to have to figure out a self-employment tax. Our self-employment tax is 15.3% of our net income. Okay? And so our net income is $75,000, 15.3%. So our self-employment tax so far is $11,475. Okay? After we have determined what our self-employment tax is, we also have to pay federal taxes, okay? So federal taxes are the taxes that, they go to fix our roads, they go to our teachers, they go to our police officers, they go to our schools, they go to our government. This is what we also have to pay federal taxes, okay? So the federal taxes is what you hear like, oh my God, I'm in the 20% tax bracket. I'm in the 10% tax bracket. All of that. That's what the federal taxes is, okay? The federal taxes are those tax brackets where the more money you make, the higher tax brackets you are in. Got it? Got it. So first we pay self-employment tax, then 2, we pay federal taxes. Federal taxes. All right. So let's say for this example, let's just say for this example, they're in like a 15% tax bracket. Okay. Let's say for this example, they're in a 15% tax bracket, right? So let's say this is 15%. Okay. So we take the same thing. We take our net income. It's gonna go off our net income, right? And so for all the tax professionals watching this out there, I know it's calculated a whole lot different, but for the purpose of simplicity and getting the idea across, I want to communicate it this way. Okay? So we'll take times 0.15, 15%, right? Which is $11,250, right? So we have our federal taxes. Federal taxes, which is $11,250. Okay? So let's add those two together. We have 11,250 plus 11,475. All right? So I'm adding the two taxes together, guys. I'm adding the this self-employment tax, which you may or may cannot see, and then also the federal taxes, right? So our total taxes is $22,725. $22,725. And you can see we pay self-employment tax at 15% and federal taxes at 15%. If you add these two percentages together, right? If you add these two percentages together, you'll get 30.3%, right? So a lot of times you will hear people tell you that, hey, you need to put away 30% of what you make, right? You need to put 30%. That's kind of that solid rule, that golden rule that, hey, you should put away 30% because you can see in this situation that, hey, we're paying about 30% in taxes. And that is the purpose of that. So guys, if you can now understand how sole proprietors are taxed, give me a hands up. Give me some type of an emoji that, hey, it makes sense. This is how a sole proprietor is taxed. Guys, and if you're just joining, I'm going to run over it real quick again. Okay? So we have a chicken sandwich business. A nice little chicken sandwich. Nice. It makes sense? Awesome, guys. It makes sense? Facebook, does it make sense? Let me know. We have a chicken sandwich business. We had $100,000 in sales, all right? So we out there, hey, man, who wants some chicken sandwiches, right? I got the spikes there, got the deluxe, got the cheese with the pickles. We was out there hustling. We made $100,000 doing that. We made $100,000 doing that. But during our hustle, we had a couple expenses, right? We had to go to the store. We had to buy some chicken. We had to go to the store, buy some bread, buy the cheese. We had a couple expenses on the way, right? So we had $25,000 in expenses, all right? So what's our net income? So to determine your net income, you're going to take your total sales minus your expenses equals your net income. Once we have determined our net income, right, it's time to get serious. We got to pay self-employment tax. Self-employment tax is 15.3% of our net income. So when you take your net income, multiply by 15.3%, you'll get your self-employment tax, $11,475. But it doesn't stop there. That's just our self-employment tax. We also have to pay our federal taxes, which is the tax bracket, right? So people are like, oh my God, I'm in the 15% tax bracket. The more money I make, the higher my taxes. Well, it's true. It's called a progressive tax system, all right? So our federal taxes, let's say we're in a 15% tax bracket, okay, we have to pay federal taxes too, which is another $11,000, which brings our total taxes to $22,725. Now we pay self-employment tax at 15%, 15.3%, and we pay federal taxes at 15%. Put those together, that's about 30% in taxes that we just paid. Guys, did I uphold my promise? Does it make sense how a sole proprietorship is taxed? Just give me an emoji, say, yeah. Give me some type of emoji, some type of thing that said, okay, I upheld my promise. And if it's not, ask me some questions and we'll jump right into it. Okay. Yeah, you guys, it makes sense? Awesome. So this applies if you do DoorDash, if you do anything like that. So let's say if you do DoorDash or something like that, some of your expenses are going to be miles, right? If you have a business, some of your expenses can be supplies, right? Let's say you hire me. I'm an expense. I would love to be an asset, but I'm an expense, right? So let's say an expense is a tax pro. Right? So these are all expenses, right? So expenses are pretty much things you incurred in the course of your business. So why are you feeling upset? What's self-employment tax? So self-employment tax is your share of Social Security and Medicare. And those taxes go to the old and disabled and retired. But it's really not that bad. Your taxable income is so much more than your net income. Right. Yeah, guys, you gotta think. I forgot. Your federal taxes is gonna be so much lower because you also get something called a standard deduction, right? So you also, and I didn't want to jump into that, but since someone mentioned to that, guys, you also get something called a standard deduction. Does anyone want me to go over? Who wants me to go over the standard deduction? Or should I go into LLCs or S-Corp? Let me know. Well, I'll if you want me to go into how the standard deduction works, let me know. But the difference between a sole proprietorship and an LLC, okay? The difference between a sole proprietorship, okay, I will go to the S-Corp in the standard Dutch. So the difference between a sole proprietorship and an LLC, guys, when I explain this to you, I promise to you it's going to make sense how an LLC is taxed. It's going to make sense. If you're a single member LLC, I promise you it's about to make sense how an LLC is taxed. Okay? An LLC is taxed the exact way a sole proprietorship is taxed. So if you understand how a sole proprietorship is taxed, a single member LLC is taxed the exact same way. LLCs don't get no extra benefits, no extra deductions, okay? The only difference between a sole proprietorship and an LLC is that it's the only difference. The only difference between a sole proprietorship and an LLC is that an LLC gets asset protection. Okay? Only difference. Sole proprietorship and LLCs are taxed the exact same way. Okay? No ifs, ands, and buts. Unless there's two or more people in the LLC, but if it's just a single member LLC, it's just you that owns that LLC, you're taxed the exact same way. Okay? So next I'm going to jump into the S-Corp, how that's taxed, and then I'll go over the standard deduction and how it really plays into this, okay? Okay, so now let's jump into the S-Corp, okay? So I'm gonna get rid of this. We're gonna jump into the S-Corp. Guys, and if this is making sense, hey, yeah, so merchant, if it's, yeah, ask me some quick questions about the sole proprietorship before we jump into the LLC. I mean the S-Corp. Yeah, so if it's two more members, it's going to be taxed as a partnership. Off the top of it, but if I have to pay my kids as a sole, how do I prove that for taxes? You're going to want to get a payroll system, and you want to issue them a W-4. I have a video on that on YouTube. Okay? So guys, if this is making sense, just give me some type of emoji, and I'm going to do this. I appreciate, yeah, I do this for you guys, and I appreciate you when you say, I appreciate you. So thank you so much. Okay? There's just so much misinformation out there that, you know, I just want to give it to you guys how it is, right? So I just want to tell you guys how it's done, absolutely. So we're going to jump into the, what's up, Jenny? We're going to jump into the S-Corp now, okay? And how that's taxed. And I'm also going to explain to you when it's best to jump into an S-Corp, right? So you hear all this, it helps me save on taxes. Well, it does when it makes sense. Okay, so I'm going to explain that to you as well, right? So we covered the LLC. Now we're going to jump into the S-Corp, all right? Let's just start clean, okay? So my promise to you is you're going to understand how an S-Corp is taxed towards the end of this live. I upheld my promise with the sole proprietorship. I got the emojis. And guys, if I miss anything, make sure you ask questions on that because I'm about to jump into the S-Corp now. So put your listening ears on and your seeing eyes because it's about to get real. It's about to get real. Okay, it makes sense? So yeah, my promise to you is I'm going to make it make sense how an S-Corp is taxed. I'm about to make it make sense. And right? So just listen up. So first one, you know, we always start with our circle. I'm going to start with a circle. Put a little circle right there. Right? Well, circle's kind of big. We're going to need a little bit more room on the outside for the S-Corp, so let's start with our circle. Ooh, look at that circle. Woo-wee! That's perfect. Look, that's a perfect circle. I didn't even have to use a tracer. Awesome. So in the middle, I'm going to write S-Corp. So that's what we're talking about. S-Corp. Got it? S-Corp. Okay. So if you're new to this live, every time I give it a business example, we sell chicken sandwiches, okay? So our business is in the chicken sandwich business. All right, so let's say we got a chicken sandwich business, right? So we're out there, hey, who wants some chicken sandwiches? We're flipping chicken sandwiches. We got spicy, we got deluxe, we got double meat, we got triple meat, we got with cheese, without cheese, pepper jack, cheddar, you name it. All right? All right. And so throughout the year, we made $100,000. Okay? We did all of that, we made $100,000. Cool. So we have $100,000 coming in. Okay? $100,000 in sales. And if you've been here throughout the entire life, it's gonna look is fairly similar to the other one, right? $100,000 in sales. Okay, so we're out there hustling, all right. Every day I'm hustling. That's what we're doing. But let's say we also incurred expenses, right? We had to buy the cheese, we had to buy the chicken, we had to buy the bread, we had to buy the fryer. We had all these expenses. Okay? So $25,000 in expenses, same thing. $25,000 in expenses. All right. So now I hope that you have your pen and pencil ready, because this is where it gets different, right? This is where it switches when we're talking about from the difference between a sole proprietorship and an LLC. Okay? And my promise to you is to make it make sense. This is where it's getting. I just want to make sure y'all are listening. This is where it gets real, all right? One of the requirements of being in an S-Corp is the owner is required to be on salary. Yeah, put your ears on. I'm gonna walk around and I'm gonna say that again. One of the requirements when you own an S-Corp is that the owner is on salary. I'm gonna say it. You guys listening? You serious this time? You're listening? One of the requirements when you have an S-Corp is that the owner is on salary. Guys, I'm going to say it one more time. One of the requirements when you have an S-Corp is that the owner is on salary. So many people miss this. So many business owners miss this. And it's a requirement. Guys, who can tell me in the chat, who can tell me what's one of the requirements of being in the S-Corp? Who can tell me in the chat what's one of the requirements? Who can say it first? I want to see who is paying attention. Who can tell me first? What is one of the Yes, Jenny. Look at Jenny. She's killing it. Yes, money mindset. Yes, Kelly. Yes, sunshine. Yes. Bam. Love it. I love it. Reasonable compensation. I see TikTok CPA. Okay. With the reasonable comp. He's getting serious about this, y'all. All right. Cool. So now that we understand that, you have to, just like TikTok CPA, it's called a reasonable salary. Okay? So let's say our reasonable salary in this S-Corp is $25,000, right? We decide to pay ourselves $25,000, okay? So what this means, $25,000, right? So this is $25,000 expense salary, okay? Which means, guys, that the owner gets a W-2, okay? The owner gets a W-2. And guess what? It's an expense. It's also an expense. Does that make sense? It's also an expense. Because you're paying an employee, which is one of the owners. It's an expense. Okay? So I'm about to make this make sense. So now, and remember our net income, if you've been here the entire life, right? Some of you guys have been here the entire life. Our net income is our sales minus our expenses. So now if you've been here the entire life with the sole proprietorship LLC, you cannot pay the owner and write that off. In an S-Corp, you pay the owner a reasonable salary and you write that off. So now remember, and I'm gonna write this formula again. Our net income equals sales minus expenses. Okay? Net income, no matter where you go, no matter if you're sole proprietorship, S-Corp, C-Corp, Z-Corp, 1, 2, 3 Corp. Okay? That's going to be our net income. This is sales minus expenses. Well, guess what? In this S-Corp, we have an extra expense. Expense. Who says expense? We have an extra expense. Gotcha. Which is the salary. So we have 100,000 minus 25,000 minus 25,000. So our net income is now 50,000. 50,000 net income. Okay? So 50,000 net income. Now remember when we were a sole proprietorship and we were in an LLC that we had to pay something called self-employment tax. Remember that? Send me an emoji. Just shoot me an emoji if you remember. If you've been in an entire life that if you're a sole proprietorship or an LLC, you have to pay that self-employment tax, which is at 15.3%. Okay? The owner had to pay that, right? Well, guess what, guys? Guess what? Yeah, I love the emojis. Remember, it's called self-employment tax because you're not employed. I just want you to think about this like this. It's called self-employment tax. The easiest way to avoid paying self-employment tax is to get employed somewhere. I'm going to say that again. The easiest way to avoid paying self-employment tax is to get employed. That's why we form an S-Corp. So you can employ yourself at your own business. You can't do this when you're a sole proprietorship. You can't do this when you're an LLC. You have to be in an S-Corp to be able to hire yourself. It's just like when you get a regular job, you don't pay self-employment tax, right? You go in there, you take an interview, you do all this stuff, and you get employed there. And the taxes just come out your check. So if we want to get employed somewhere, how about we just get employed at our own business? That way we don't pay self-employment tax because we are now employed. We're just employed at our own business. So we're going to issue ourselves a W-2 just like we were a business. So remember, when you were self-employed, you paid 15.3% in SE tax. Right? With an S-Corp, don't pay it. Don't pay it. Because guess what? You're employed. You're gonna pay it over here. Okay? So what that means is on that 50K, all you're gonna do is pay the regular income tax. Regular income tax. Regular income tax. That's it. If you guys are wondering, how do I issue myself a W-2, W-4? I strongly recommend, and if you watch this live, get started with QuickBooks. QuickBooks can take care of all of this, okay? I'm not even 100% sure how the payroll taxes and all that, I don't know. I allow QuickBooks to do it, and you should too. So I strongly recommend QuickBooks. And even if you are into an S-Corp, I don't recommend you doing it by yourself. Hire me to do it. Yeah, QuickBooks is accounting software. So yeah, strongly recommend QuickBooks. But guys, I'm explaining to you, yeah, QuickBooks is awesome. I'm explaining to you how this S-Corp works. Now let's talk about when does it make sense to get into S-Corp, okay? So when does it make sense to get into an S-Corp? Because there are additional expenses with an S-Corp, okay? So one of the expenses, you remember it. Remember we spoke about this earlier. Hey, guess what? My goal is 500 on my fourth. Nice. Run it. Remember the requirements that we talked about being in the S-Corp. The number one requirement, and most of you guys already know this because you guys are really smart, you've been paying attention, is that the owner has to be on salary. Well, you know what we're going to need? We're going to need a payroll software. Payroll software. Okay? You're going to need a payroll software. I mean, please get a payroll software because one of the requirements is that the owner has to be on salary. Payroll software. So what? That's going to run you maybe like an extra $40 a month. $40 a month. So we take 40 times 12. We're looking at another $480 a month. $480 a month, okay? That's just one of them. Then you're probably gonna have to hire somebody, right? To come up with this tax plan. So guys, what I'm doing with you right now is literally walking you through a tax plan. And tax planning is it's an expense. It can be very expensive. You can expect to spend up to $2,000, $3,000, $4,000, up to $10,000 just for a tax plan. Okay, and so you're probably gonna have to hire someone to help you with this, or to help you come up with this. So I really don't recommend that you do it yourself, but I'm walking you through it. Okay, so you're gonna have to hire a professional, right? And they're gonna charge you, if they're a pretty good professional, they're gonna charge you around $2,000. Okay, $2,000. Seriously, $2,000. Okay, so we have payroll software, we have a tax pro, CPA, tax pro. Okay, you got that. So that's the tax pro coming up with the tax plan. All this. Hey, this is going to have to do it. Hey, we're going to have to do this. Yeah, Jenny's a piece of mind's worth of cost. Absolutely. Do this, and they can take care of so much for you. It's absolutely worth it. But I just want to make sure before you jump into it that you can afford this. Okay, and then you're gonna have to file 1120S. So typically when you're a sole proprietorship, you're just an LLC, all you do is file your personal tax return and you're done. That's it. Okay? When you're an S-Corp, you're also gonna have to file a corporate tax return, right? And this can easily start at $800. $800. All right? That can easily start at $800. So we have 800 plus 2,000 plus 480. All right. So just by getting to an S-Corp, you can expect to pay somewhere around $3,280 a year. And that's not even paying for someone to take care of your bookkeeping, because if you're an S-Corp, you must have a pretty good business. You probably want to, so 100K is really good, or where I like to stay is when your net income is around 50K. So I'm gonna get back with you on that one, okay? So think about this, okay? So an additional expense for an S-Corp, you're gonna expect, we have this, right? You guys understand this? Okay, cool. So S-Corp expense, $3,280. And S-Corps, so when you're like a sole proprietorship, or you're like an LLC or something like that, you should be taking care of your bookkeeping. Like, you really should, like, without a doubt. I mean, and it gets so expensive if you neglect it, but it's a whole different ballgame when you're S-Corp. When you're a corporation, bookkeeping is super serious. You're going to have to take care of it. Seriously, you're going to have to take care of it. So if you're going to hire somebody to take care of your bookkeeping or something like that, you can easily expect to spend $300 a month, right? That's another $3,600, right? This is for bookkeeping. And guys, I'm talking about like really good people. You can, there are people out there that will do it cheaper. I'm 100% sure, but I'm just telling you, if you want real good quality, someone who's going to explain it to you, someone's going to do all that, yada yada, cool. This is the route you want to go. And I'm just being like completely real with you. So we have $3,600 plus 3,280, right? So for the year in an S-Corp, you're looking at an additional $6,880, okay, by forming an S-Corp. Okay, so now that we understand that, remember, one of the requirements, if you guys have been here the whole entire live, is that the owner has to be on salary. So you're gonna add that expense in there, okay? Got it. Make sense? Makes sense. Okay, so you also want to look, can you afford this? Okay, can you afford this? So can you afford this? So let's say your net income is $50,000, all right, or whatever. Well, yeah, net income is $50,000. You want to look at your personal expenses as well, because you may need $42,000 to pay your personal bills, right? Just because you made $50,000, you also have to pay yourself, right? You kind of get what I'm saying. So if you have to pay yourself $50,000 a year just to make it, it won't make sense to file an S-Corp, because now your expenses are $56,000, or we can round it up, $57,000 a year, right? It doesn't make sense. So let's say if your net income is, let's say your net income is $20,000. Your net income is $20,000 for the year, all right? And then you want to jump into an S-Corp. So you want to jump into an S-Corp, 12,000. So let's say, what would we say, 20,000. I'm just going to round up to 7,000, okay? Minus 7, 1, 2, 3, 13,000. Okay, so let's say now your net income is 13,000, right? Is that even enough to pay yourself a reasonable salary? Remember, one of the requirements is that you have to pay yourself a reasonable salary. 13,000 may not be a reasonable salary. Who knows? It's really up to the IRS. So I know you guys hear this. The purpose of me making this video is, guys, an S-Corp can help you save on self-employment taxes if it makes sense to do it. There are so many instances where it doesn't make sense to do it. There are so many instances where people just hear about it, they jump into it, and they don't even put themselves on payroll. They forget the number one rule, which is, hey, the owners have to be on payroll. So literally, when you're filing your tax return, your corporate tax return, you're going to file 1120S with the S-Corp. When you're filing that tax return, guys, there's literally a line that says, what did you pay to the owners? There's literally a line for that. If that line is 0, red flag. Red flag. Just saying. I've seen it happen before. Red flag. Guys, if that makes sense, give me some type of emoji. If I broke that down pretty well, it makes sense, you comprehend, give me some type of emoji, heads up. Yeah, that makes so much sense. You're welcome, Sunshine. Thank you for sticking around. Yeah, if that makes sense, guys, just let me know if that makes sense. It makes sense? Awesome, 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 awesome. Okay? Yes, I'm so glad. I'm glad you guys joined, because this is really important. I came home late, but I reviewed, it made sense. Yeah, and I'm screen recording this, so I'm gonna re-upload this to YouTube. Yesterday I screen recording, didn't even upload. Yeah, so I'm gonna re-upload this. So damn, I just got here, I wish I joined. Yep. So I'm live Monday through Thursday, 8 p.m. Central Time. When I started this live, I made a promise to all of you guys that I'm going to make this make sense. Okay? I understood, but still don't know what's best versus sole proprietorship. Okay, so if you're sole proprietorship, it's probably best to stay a sole proprietorship to your net income is around $50,000. Okay. Christina, I just did the LLC right before the S-Corp. So I'm going to re-upload this to YouTube. so you guys can rewatch this. And yeah, so Gigi says she got it. Yeah. So absolutely, and I'm all for the S-Corps, all for putting my clients on the S-Corp if it makes sense. It has to make sense. Once it makes sense, I'm all for it. Let's do it. Let's save on self-employment tax. Let's do it. Let's do it. Let's do it. So yeah, can you make an LLC in a state that you don't live in? So when it comes to structuring LLCs, I mean, I can like to give advice if you live in Texas, but really the best practice is to consult with an attorney. Not 100% sure. I wish I could answer that question, but I specialize in QuickBooks and federal taxes. So thank you for the share. So not 100% sure. So profits are going over 50. That's good. So if profits are going over 50K, that's a good sign. Yes, absolutely. Absolutely. That's because you can just form that S-Corp with so much confidence. Like you just, yeah, I'm good. So that's kind of like that. Now, in some instances, can you form sooner? Yeah. But it's just really important that you consult with a tax professional. When you're a tax professional and speaking with you, they should explain it to you like this. If they're not doing it, you're working with the wrong tax professional. You just need to give me a call. Give Duke a call. Hire me. Let's do this together. So, yeah. Hi. Yeah. Adrian here. What's up, Atlanta? If you form an LLC, can just okay. Let's walk through this one more. Let's walk this again. So I hope you this I feel like this is so much like great work. I just don't want to erase it. Like I just want it to stay there. Thank you so much for the gift. I just want it to stay there forever. I just want to frame it on the wall. Like okay. It hurts. Oh, no. Okay, let's go. Okay. So when you're an LLC, when you form an LLC with the state, right? So you form an LLC. Okay, so here are kind of the steps of a business. When you start a business, you're just a business. So I feel like doing that. When you're a business, you're just a business. The next step kind of people do is do a DBA. A DBA, you register with that. You register with the county. An LLC, you register with the state. All right. So here's your LLC. LLC. Okay. So when this LLC comes in, the IRS is like, what is this? God, what the heck? Because the IRS doesn't recognize an LLC. So when they see an LLC come in, they're like, what the heck? What is this? What the heck? Is this what does LLC stand for? The IRS doesn't know what LLC is, all right? So what they do is they consider you what's called a disregarded. I hope I spelled that right. If I don't, oh well. I'm good with numbers, not words. Disregarded. Damn. Remix. Disregarded entity, right? Which is also known as a sole proprietorship. Okay. So disregarded entity, also known as a sole proprietorship, okay? So when you have an LLC, they're like, what is that? What? Unless you tell the IRS how you would like to be taxed, you're taxed as a sole proprietorship. Because there is no form for LLC. You understand? There is no form for LLC. Now let's say you say, hey, hey, Mr. IRS, how you doing? I would like to be taxed as an S-Corp. Okay, cool. Let's talk about that process. So the only way you can be an S-Corp, you don't form an S-Corp. An S-Corp is the way you're taxed. Okay? An S-Corp is the way you're taxed. And before I get into how it's taxed, okay, so a long time ago, there were only two things that you could do when you start a business. You could only be a sole proprietorship, or you could only be a C corporation. That's it. There was nothing else. There was nothing else. There was nothing else. It was just, are you a sole proprietorship or are you C corporation? Okay? That's it. Those are the only two things you could form. Then things started getting complicated with C Corps. You could do this with a C Corp. It was just a lot of things that just came about. And then the S-Corp came into play. So S-Corp gives you the benefits of a corporation without the difficulty of forming one. Okay? And then the LLCs didn't come around till 1977. Okay, so now that we got that, you have to tell the IRS, hey, I'm an LLC, right? But I'm not a sole proprietorship. I want to be taxed as an S-Corp. And you do that, right? Guys, I'm about to tell you something. Right? A lot of people, if you try to do a service, services charge you like 100, 300, 400, I don't know. They'll charge you a lot of money to do this. But I'm going to tell you how you can do it for free. How you can take your LLC and form it to an S-Corp. I'm about to give you the game right now. So, listen up. How you take your LLC to an S-Corp is this. Form 2553. You're going to file Form 2553. That's an S-Corp election. Go watch YouTube videos of them. If you're a tax professional thinking about, or you're thinking about being a tax professional, look, I just taught you how you can take your client and form into an S-Corp. You know, charge your price that you want to charge them. But this is how you take your LLC to an S-Corp. You file Form 2553. The IRS has 60 days. IRS has 60 days to approve. Okay? The IRS has 60 days to approve. Once they approve, you're an S-Corp and you can file S-Corp return. So that's how you take your LLC to an S-Corp, okay? So if you're just joining, I'm going to walk you this over it again. If you have an LLC, the IRS doesn't know what that is. And, what's an LLC? I don't know. What should we do? Forget it. Let's forget about them. Let's disregard them. We're going to disregard the LLC. Get up out of here. You're a sole proprietorship. Unless you come in and say, you know what, IRS, I would like to be taxed as an S-Corp. And you make that election by filing Form 2553. Hope that answers your question. Run through these examples. Get your questions in, because I'm about to do. My man, I would love for you to review it, but I'm sorry. Can they reject it? Yeah, they can reject you. What you mean? Trying to tax us? Yeah. You don't have to erase it. Oh my God, when I erased it, that broke my heart. Oh God. Yeah, so guys, that's how an LLC is taxed. What's your YouTube channel is Duke Alexander Moore. If you leave this live and just go to the link in my bio, click the little Instagram thing, subscribe to it. I'm gonna re-upload this whole video there. There's so much valuable information in this video. I made promises to you guys in this video, and I try to uphold my promises. Do you do this weekly? Love this info. Thank you. Absolutely. So I'm live Monday through Thursday, starting at 8 p.m. Central Time. Okay? Thank you, Duke, for real. You are so welcome. Awesome. Thank you, guys. Yeah. Thank you, guys. So if you see value in this information, before I dip off, scale 1 to 10, how valuable was this live? Scale 1 to 10, how valuable was this live? What's a good book to read about taxes? What your CPA isn't telling you? I like that one. The Power of Zero. I like that one. 10. Awesome. We got 10s in there. Awesome. Yeah, guys. Thanks, Duke. Valuable information. You are so welcome. 10. Thank you, Jenny. Thank you, Jose. Thank you, Merchant. Thank you, Rhythm 18, Money Mindset. Thank you, Sarah. Thank you, Sarah Hale, for subscribing. Thank you, Layla Makes Good. Thank you, Doris Beauty. Thank you, Kelly. Thank you, Christian Castro. I really appreciate Christian with that. Thank you, Michael Cole Higgins. I really appreciate that. So, thank you, Merchant. Thanks. Can I work with you even if absolutely? So yeah, I have clients nationwide. So I live in Dallas, Texas. Clients nationwide. Shoot me a message, shoot me an email. We can definitely link up. Thank you. You guys are welcome. So I upheld my promises. So guys, what you just took away from this live is that one, you learned how sole proprietorships are taxed. Two, you also learned how LLCs are taxed just like a sole proprietorship. You also learn that the only difference between a sole proprietorship and an LLC. Thank you for subbing. I saw that. It came up on my notifications. The only difference between a sole proprietorship and an LLC is that an LLC has asset protection. You also learn how an S-Corp is taxed. The number one thing you learn from how S-Corp is taxed is what? That the owner must be on salary. You also learn that, hey, 50,000 is probably the right time that I should be jumping into an S-Corp. You also learn what happens when you file an LLC. The IRS doesn't recognize it. They disregard it as a sole proprietorship. You also learn that in order to take your LLC to an S-Corp, all you do is simply file Form 2553 with the IRS, and they have 60 days to approve it. Have you worked with private providers for with a P? Nah, not. But if you can send me a message, if I can see if I'll be able to help you. If I can't help you, my network is even more amazing. Like, they're so much better than me. They're smarter than me. Yeah, so if I'm not able to help you, I can definitely find someone that can. So yeah, hope you guys took away so much. Please don't ever fucking record it.